Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 9th of November 2018, which is a Friday. And we will be starting off with the S&P 500 E-mini futures market. Last week was actually a very good week for the markets in general. We did have a lot of predictable and anticipated price action unfold across the majority of the markets, and S&P 500 E-mini futures market was no exception. If you recall our analysis for this market the prior week, we'd been talking about the importance of the bounce just above the 2600 level, which is also obviously a very, very strong area of support for this market. And so no surprises at all why we actually witnessed a bounce off the 2600 level. Last week, price just spent most of its time basically rebounding off of the level and just gathering the bullish momentum here that is definitely needed for this more longer term uptrend that we witnessed for this market earlier in the year to basically resume. Of course, we've had a very, very sharp sell-off not too long ago. That was basically an attempt of the market to test the 2600 level, as we saw over here. We had also been talking about all of these candlestick wicks sticking to the downside throughout the entire period. That price was seemingly heading down, and we had indicated how that may actually potentially just be an indication that the market wants to get to an important area of support to regather the momentum towards the upside over here. And that's exactly what we've seen over the past few weeks unfold for this market. Interestingly, last week we'd also talked about the importance of the support and resistance area surrounding the 2800 level, and we had identified this as a major trouble area for buyers as they try to regain momentum for this market. And interestingly, we did see the market actually hold up at the 2800 level once again, very unsurprisingly, because of course this area has been a proven area of either support or resistance for the market. Tons of indications of resistance at the level in the recent past, and then indications of support as well. So very dominant and a very obvious area here around the 2800 level, and so no surprises at all once again why the market seems to be holding up at this level. This also means that this coming week for this market is going to be an extremely decisive one, because we need to see if the 2800 level here will continue to provide resistance for this market. If it does, of course, we will then see price action more in line with the more volatile and choppy trading conditions that we've witnessed for this market. On the other hand, if the 2800 level here basically gives way to the market and allows for buyers to continue to gather momentum, we may actually potentially see the market continue its way up more in line with the momentum that we've seen from the buyers over the last week or so. And if that happens, the 2800 level can then potentially act as support as well and allow for more buying to come into the market, basically getting the market ready to get to a point where it can continue with this more longer term uptrend that we'd witnessed for this market earlier in the year. If that happens, of course, the 2900 level over here and this major high that the market created, an all-time high, of course, will then be in strong contention. It will be interesting to see if the market can resume its earlier bullish momentum, where we were continuously seeing new all-time highs posted by the market almost week in, week out. But for that to happen, of course, the 2800 will need to give way to the buyers over here, and it'll be interesting to see if that will happen going into this week. Okay, so the next market we're going to be looking at here is the light crude oil futures market, which is basically over the course of last week unfolded into a typical textbook breakout, pullback, continuation play off a rising support trend line. If you recall analysis from the prior week, we've been talking about the importance of the breakout and the pullback back towards the rising support trend line, which also fell in very sharp and very obvious confluence with a horizontal area of support and resistance as well. And so all the more reasons for sellers to pile up their orders here and basically take price further down south. And that's exactly what we saw unfold the prior week. We had very consistent and persistent action from the sellers over here, and we didn't see any kind of pullbacks at all, which is exactly what you want to see in a typical breakout scenario where price is consolidating inside of a pattern for for a decent amount of time, and then the breakout is a volatile one where the market will continue in the direction of the breakout for a decent period of time and with good intensity, and that's exactly what we're seeing over here. Interestingly though, we noticed that the market closed just under the $60 major round number, which is a big round number for the crude oil market. And so that does sort of beg the question that how far should we really expect for this bearish momentum to continue? Because as we zoom out of this chart, we notice that the $60 level actually back in mid-2015 acted as a very strong period of support and resistance for the market, where the market basically spent a lot of time consolidating within a very tight consolidation box, pretty much at the $60 level. As you can see, that's precisely where price is right now. So if the $60 level is cleared and the sellers are able to continue to build this momentum towards the downside, and the $60 level does not provide the support that it potentially has the capability of providing, we could actually see the market plummet further down, all the way down to the former resistance levels around the $54 level right around here. But that, of course, would be an optimistic target for this market, given that it's pretty much sitting at a very crucial area around the $60 mark. But like we said, if the $60 level does give way to the sellers, and we see this momentum from the sellers continue to build up, $54 level shouldn't really be a hard target for this market at all. Okay, so the next market we're going to be looking at here is the Euro currency futures market. This was another extremely interesting market in terms of the price action that we saw last week. For this market, we've been talking about how the market seems to be finding the 1.16 level as a pivot and a magnet as far as the more recent sideways consolidation theme is concerned. We've seen price time and time again come back to the 1.16 level and find formidable resistance or support at it, yet we've not really been able to see price basically escape this area for much longer at all. So for example, over here we saw the market break down hard, but then we also saw the market pull right back up towards the 1.16 level and then basically again continue to oscillate and move up and down around the 1.16 level in this area of support and resistance in the area over here. We've been talking about how we're interested in seeing the market move further away from this level, and that may potentially indicate to us that this the market may be looking to move past this current theme of basically using the 1.16 level as a pivot and a magnet, and for the market to be able to start trending again like it was earlier in the year. We did see developments on that front last week, which is why we say that this was we did see some really interesting price action. As you can see, the market last week, actually the week prior to last one, we noticed that it had bounced off of this swing low. And last week's analysis, we had talked about how if the 1.16 level here holds as resistance and allows for the bears to continue dominating the market, we could potentially see the market resuming the more longer-term downtrend that we witnessed earlier on in the year. Last week, in fact on Friday, the market actually closed almost at this area of support and this former swing low over here. As you can see, the first time that the market bounced off of this area was a major bounce. The second time that the market bounced off of this area was a minor bounce. We just basically pulled back to the 1.16 level, and now we're down to that level again. And that to us is an indication that the market may potentially be looking to break this area towards the downside here. We're not seeing any indications of that as such just yet, because of course we haven't really seen the market break past the swing low at all. But to see the market actually make a move further down here and possibly even use this area as resistance to continue its way down, we should say will not really come off as a surprise for us at all, because we're looking at this development and it definitely favors the sellers here for sure. But like I said, the market still is for the most part consolidating, and so even a bounce off of the swing low here wouldn't be totally surprising either, given the overall weakness that the market has been in and how the market just for some reason continues to be swinging back towards the 1.16 level and this area of support and resistance that runs pretty much in the middle of this consolidation area that the market seems to be caught up in. So we're open to both scenarios, but just looking at how the market is coming back again and again towards this area of support over here indicates to us that a break towards the downside is what we would be more inclined towards seeing. But even a bounce off of the support area and more consolidation going into this week should also not come off as a total surprise either. Okay, so next up we look at the gold futures market. A market that seems to be stuck between two very, very important support and resistance zones. So up top over here we have the 1240 area that's acting as very formidable support, resistance for the market, and then down here we have the 1210 more shorter term area that's also a very important one. If you look at the more recent price action, tons of indications of price either finding resistance or support at the level, and so no surprises at all why we've for the past few weeks seen price basically being caught up between the two very important support and resistance levels. Interestingly though, last week, especially on Friday, we did see a very strong push from the sellers here, and we were actually able to witness a market close very strongly bearish on Friday, pretty much just above the 1200 level, and that could make for an interesting development going into this week. You'll notice that we've also drawn this trend line in which we're going to be watching very carefully, because for the market to eventually break past this entire period of sideways movement here and continue with a more longer term downtrend, it'll need to break past this rising support trend line, possibly use it as resistance, and then sort of break towards the downside or develop into a story more similar to the one on crude oil futures that we were discussing about a moment ago. That's kind of the development that we would be looking forward to if this bearish momentum here continues and this area of support and resistance around the 1210 level does not provide support but does provide resistance in case we see some buying come into the market, which would be typical of a sideways market where buyers and sellers are in a tight tussle to take price their way. But just looking at this and how the market was able to close strongly bearish on Friday makes us more inclined towards seeing a potential test of this rising support trend line over here, and maybe even a potential break towards the downside, a possible quick pullback to the resistance, the support trend line, and maybe a continuation towards the downside over here. All of that will of course be entirely contingent on whether the sellers are able to sustain the momentum going into this week. But like I said, the strong close on Friday does give us hopes of a possible move further towards the downside, and even a potential continuation of the more longer term downtrend that we witnessed for this market earlier in the year. Okay, so finally we look at the 10-year Treasury note futures market, which is another market that's been struggling for momentum in the more recent past, and last week was no different at all. We did see mostly red or bearish candlesticks print over the last week, but the long wicks on the upside on these candlesticks suggest that there was buying during those periods as well, and the sellers were only just able to tip the board onto their side before the day ended. And so on Friday actually we did see a very strong bullish candlestick as well. All the more reasons for us to believe that the market continues to be in a sideways and consolidating phase and is for the most part struggling for momentum. For this market, we're looking at the 118.10ish area as a key area of support and resistance for the market, which for the time being seems to be acting as a pivot and a center area of support and resistance that just continues to attract price, at least over the last few weeks. Of course, this is a more long-term area, and we've had tons of indications of the market either finding support or formidable resistance off of the level, and so no surprise at all why the market a weak market just continues to be trading in at and around the 118-ish and 118.10 support and resistance area. On Friday too, we saw the market actually close very close towards to the 118.10ish area, and so as long as the market remains in the vicinity of this longer term support and resistance area, we really do not expect for the market to gather any kind of momentum. A move further away from this level, however, will definitely make things more interesting. Of course, for the more longer haul, as we zoom out of the chart, we see that the market has actually been in a consistent downtrend. So that's also the direction that we would anticipate for this market going forward. unless we see any kind of major indications from the bulls and the buyers basically to take price further up north. So we have been in a very decent downtrend over here up until the more recent past. Over the past few months, we've been actually consolidating and moving sideways for the most part. So we're still favoring the more longer term trend over here. And when and if this consolidation phase ends, we would potentially like to see the market actually continue its way down. But of course, that will entirely be contingent on how much momentum the bears and the sellers here will be able to gather going forward. For now, the market just remains rather tight and consolidating around the 118.10-ish support and resistance area, and other minor and major areas created by more near-term and short-term support and resistance levels and swing highs and swing lows.